Welcome to Markets Now. Chuck Shelby, Risk Management Commodities, joining us on what ended up to be a down day in pretty much all of the grain and livestock sector. And Chuck, commodity-wide sell-off, was there any particular catalyst that really forced all that selling pressure?
I really think it was just the look at what's going on around the world, the two conflicts we see out there. And I think it was the end of the month. I think just it was easier to be a seller than it was a buyer. I guess eventually we're going to run out of sellers. The market will find a spot here that it takes hold. But certainly last Friday and today, pretty negative in all the commodities.
Yeah, and when you look at especially corn and wheat, December contracts are going to go off the board here on Thursday. And so there's some forced hedge pressure there too, isn't there?
Yeah, I think a lot of producers use the basis contract, especially for their corn. They might have used a hedge to rise. So either you have to cash out your corn or you have to roll forward. So a lot of producers, with the break we've had in the market, just haven't been able to make that decision. But as we move towards Thursday, they're going to be forced to either roll or cash it out.
Absolutely. So new contract lows, or at least new lows for the move in corn and many of the wheat contracts. And so now where do we need to hold next?
I think 415 in D's corn, we might see the market take a run underneath 450 as producers have to face that roll or cash out. Chicago wheat, I think towards $5 might be a target of the market. Those should be support areas there, and that should be able to hold the market at this point after such a big break in the last week or two.
Yeah. And it seemed like soybeans held together better than what we saw in corn and wheat. Was that just because products were higher, or is that market trying to hold some Brazilian weather premium yet in there?
I think it's a combination of two. World soybean supply and U.S. soybean supply is pretty tight. When you look at the oil and meal, I think those are two supportive factors that go into play. Also, it did rain some in South America, but again, they're going to need a lot more rain. They're behind on their planting somewhat. So overall, beans just have a better fundamental case and are supported by some weather. So those two factors alone, I think, give beans as the leadership role in our commodities.
Absolutely. So the Brazilian plantings being behind, how much is that going to impact yield, do you think? Are we going to have to continue to come down here on some of these production estimates?
Eventually, as time goes on, I think in the next few weeks are going to be pretty interesting and critical to that market. I mean, again, as you progress through the season, there's a point there where you're going to have damage that you can't reverse. I think the market still feels it's possible to end up with somewhat of a good crop down there, but at this point, it's got to happen pretty quickly here. It's got to be a change in pattern, not just some light showers or scattered rainfall. So as we move into the next few weeks, I think we got opportunity to maybe make this bean market move higher again up towards the upper end of the ranges.
Yeah. Will that pull corn back along with it or not? And what do you see in terms of that impact of weather on the second crop safrinha corn in Brazil?
Yeah, that's an important factor right now. The corn market doesn't seem to be honed in on the second crop safrinha crop and what will happen. The impact of it if this weather continues to be drug out. So I think that is a factor for corn going forward. But the biggest factor on the negative side to look is what producers are going to have to do in the next few days. But as we move into December, I think there's opportunities that the market has the ability to start to look at that weather on the second crop corn, and also the hedge pressure from producers will be gone in corn.
Yeah. So in your mind, is that what it's going to take to finally turn these markets around or not?
I think it's a process, a combination of negative things that came together. I think the beginning of the month of December, I looked for some market rallies at this point in time. The question becomes how much can we get, and what's going on in the world. It's certainly a very volatile world. So next month, I look for the market to have the ability to move higher, but there's factors that are going to have to come into play to help the positive side out to move us to the next level higher.
Yeah. Cattle market didn't fare much better. We have had steep losses Friday and today. And so, we have taken out pretty much all of the rally from all the way back to May. And where do we stop here now, do you think?
Well, as in our markets, we always like when the funds are, buyers and help propel markets to levels, and they generally push the market too far. So I think, what we're seeing in the cattle market is just a liquidation of fund money. I think another factor might be the concern over consumers. Are they going to continue to, spend money on the meat products, and beef is your highest price cuts? I do look for a little optimism as we again move into December, as packers look to buy for the upcoming holiday, but it's hard to tell when the funds are done. When they're such big positions, I think they're pressing the market right now. There's no buyers underneath there. So we're just going to have to look for value in the cash side and see where that comes in to support the market.
Yeah. Commitment to traders report delayed here. So today or this afternoon, we'll kind of get a look at that. Do you expect maybe funds are going to be close to flat yet? And will that take some pressure off?
It's been a significant break since last Friday, so I'd say they eliminated a lot of their positions, but I don't know that they're completely out yet.
Yeah. And the hogs obviously falling here today with the cattle market, but we're getting some pretty big premiums built back in those deferreds, aren't we?
Yeah, I think that's something for hog producers to look at. The deferreds are still at a profitable level. The question we have to ask going forward, will there be enough demand for pork to rise, to make the front months rise, or what we see in the long run, do those deferred prices drop down to the front end? It's still an unanswered question, but if you're a producer, you look at those prices in the deferred, you might want to take advantage of those with some put options or some kind of strategy to protect that value in the back end months.
Yeah. And you mentioned, the demand, consumer demand. We have lower cash, lower cutout values. These values are well below last year. And so do you think we're getting to that point, Chuck, where this is going to start stimulating some demand?
Well, I think your biggest positive is you're going to have a holiday season, and consumers tend to spend the money no matter what when you get towards the Christmas and New Year's holidays. So I believe there's enough consumer demand out there in the coming weeks to give us an opportunity for higher markets. My question becomes again, as we pass into early 24, will that demand slip away, or will consumers continue to buy? So unanswered questions, but I do think the demand will be here in the near term.
Let's hope so. Thanks so much for joining us, Chuck Shelby, Risk Management Commodities, and that is Markets Now.